Hello world, welcome to Farm the Market. In this video I'm going to continue with my post-trade analysis series. I started reviewing my trades for 2022 in the previous video. If you didn't watch it, you can find the link here. It will give you some more context. And even if you didn't watch it, I think you can get some useful information from this video. So let's get started. Just a quick reminder, I recommend that everyone does this, regardless of your process or your technique or what kind of trader you are. Always keep detailed journals or blotters or whatever you want to call it of what you're doing and review them. Be serious about it, check your numbers. Numbers don't lie. And hopefully by doing these periodic reviews, you can correct your mistakes and reinforce your skills. And actually that's what I'm trying to do with these videos, you know. I'm kind of translating what I have in my spreadsheet to a more digestible and, you know, something I can share with others. And to be honest, by doing these exercises, you know, speaking out loud and trying to be more critical about what I'm doing and trying to explain it to someone else, I have found it to be a good exercise for me. So as long as it works, I'm going to keep doing it, and I hope it's useful for you as well. So this is a summary of how 2022 has gone so far. And as I mentioned in the previous video, you know, nothing to write home about. It's been, for me at least, because everyone has his or her own journey in the markets. It's been a tough year, you know. I have pretty much only broken even. And, you know, I have been trading quite a lot. I mean, 137 trades so far, but the returns are just not there yet. And well, if I break it down by month, you can see that up to March, I was, you know, doing, at least the trend was going up. I mean, it was pretty much flat, but at least the trend was going up. And since April, things are have been going down. What has been changing? Well, the winning rate, as I mentioned in the previous video, do not focus too much on this number. It's important, of course, but do not be obsessed to get a high winning rate. If you do the numbers, and remember, this is something that you have to repeat over a long period of time. If you do the numbers, if you can keep a winning rate of 40% or above and a ratio of 2 or above, eventually numbers will, you know, line up and you will be doing well. But well, right now I'm not doing either, so that's part of the problem. My winning rate is very low. I have to improve that. I scaled back my trading, as you can see by the number of trades. We will look at the notional exposure later, but just by looking at the number of trades, you can see I have been trading less. And that's, I think, an important lesson. If things aren't working well, there's no reason to step up trading. To the contrary, you have to scale back. My average win is going down, so that's not good at all. My average loss is going down as well, which you could think is good, but you know, when you are in this gray area where everything is breaking even, pretty much if both are going down or both are going up, that's not really helping you. The ratio improved a little bit, but as I mentioned, this has to be above 2, so right now 1.31 is useless, but well, it has a green check mark just because it's better than the last one. And well, the return, I'm pretty much flat, but well, it has the red sign because it's negative. So how will I describe the past couple of weeks? Well, as you can see by this beautiful artwork that I modified, it's been dark. It's been dark, you know, it's a lot of whipsaw. It's been hard to find anything that really starts to trend. And when you are in this environment, you're gonna get a lot of, you know, good days, bad days, and it's like you make one step, you know, towards the goal, but 2 steps back the next day. So it's been hard, and that's why I want to emphasize the word patient. I have to be patient, and in times like this, you have to be really patient. In the last video, I mentioned one of the main adjustments that I was going to do. I identified that, you know, I like to trade breakouts and pullbacks. and I identified that I had some decent trades during the past few months where I had a good return, and by good return I mean something that is at or above my average gain, but then it came crashing down. So in order to mitigate this, I announced in the last video, well, it's not like an announcement, it was just a conclusion, that I will try to be more active, taking care, so to speak, of these positions. Whenever I saw a gain that was close or at my average gain, I will try to protect it more aggressively. So the plan was to move the stop loss to the break-even points right away. And in theory, this sounds good because you can say, well, at least you're breaking even or having some a small profit, but it's not negative. But what ended up happening was that I was choking off the trades, and many trades were just I was just getting kicked out really fast, and well, that wasn't the idea either. So what I ended up doing towards the end of the month is whenever I saw a decent gain, I started to move up the stop loss, but not all the way up to the break even, maybe 1/2 of 1/3 of the distance, and that's what I have been working with during the last couple of weeks. And actually, I would like to take this opportunity to mention that although the numbers you see here are for the trades that have already been closed, I do have some open trades for May. Unlike April, where it was a coincidence that I was completely out of the market when I did that review. This time around, I have some open positions, but well, it's mark to market. It's just paper gains, so there's no point of comparing those numbers with the ones in this presentation. So in the next video, or maybe in the next couple of videos, as those positions are closed, I will include them, and you might see numbers move a little bit, but I don't want to compare apples with oranges. So those adjustments that I mentioned regarding moving the stop loss too fast, although it protected me because the average loss went down, well, it also mitigated my gains in many trades. So I mean, I'm not getting hurt, as you can see, but at the same time I'm I'm losing time, because every month that passes and you are not generating returns, well, it's some time that you are not getting back. So it's good in the sense that I'm being patient and I'm not getting hurt, but of course there are things that have to be improved, and well, I have especially to bring this number up, the ratio and the win percentage, because if these go up, even if these are relatively small, if I can bring the ratio up and the win percentage up, I might need to do a lot more trading, but in the end, the returns will start to compound. So that will be the main goal. Even if I'm trading with, tighter stops and tighter targets, I need to bring up these numbers so the returns can start to improve. This is a slide that I included in the last video, and I mentioned at the time that I was expecting May to be a very slow month, quote unquote, because I had to be patient, things weren't working. So when things are not working, you have to stay patient, first of all, and you have to scale back your exposure. So in this graph, what I'm showing is basically the percentage of my portfolio that is open at any given time. So it happened. I mean, it's not like I'm Nostradamus or anything, but of course, if I have a set of rules and I know that times like this I have to scale back, well, I have to do that even if I don't like it. So especially for the first half of the month, that's this shadowed red area, I really had pretty much no exposure because nothing was really working, So I might bring the position up to 10%, close to 20%, and try to see what was working. There's an asterisk here because, as I mentioned, this presentation only includes the closed positions, but actually there are a few open positions. I'm about 40% invested as the making of this video. So it's not like I'm completely out of the market, but as you can see, I'm still very barely not even half of the portfolios invested at the time. And well, right now the mark to market for that position, it's about 0.6%. It's pretty much flat. It will need more time to develop and hopefully accumulate some returns. One of the other conclusions that I shared in the past video was that given the general market conditions, it would be important to look for more shorting opportunities. So during May, during May, I took more shorts, basically again for the positions that I have already closed. It was 50-50. So I guess what I'm trying to say with this is, well, especially for my case, it applies because I usually shy away from going short. I mean, I can trade short, but I feel much more comfortable going long. I think shorting has, its own, own characteristics, and it's not the same. It's not just like a mirror image of going long. I think, well, at least again for me, I think it's a little bit harder. But if the market is not giving you too much opportunities on the long side, well, you have to look for other opportunities. In this case, I started looking for more shorting opportunities, and I'm keeping watch lists, and I'm doing some screenings more often, looking for shorting opportunities as well. Regarding the average holding period, I'm also trying to be more agile. I have been in the positions for a shorter period of time, for better or worse. But given the market conditions, I think you have to be. How's the word? So it's more nimble. I think it's the word. Like you're faster coming in and out. And also, like the saying goes, like the saying goes, under these market conditions, you have to always be closing. Whenever you have a chance, take a profit and move to the next thing. And well, just a reminder, I shared this also in the last video. I found this website a few weeks ago, where you can post your trades, and it keeps track of the performance. It's a way to make it public so anyone can see it, and of course it's not the same as if I shared a spreadsheet that I can manipulate. And I thought it would be interesting to share this portfolio in particular, since it's very vanilla. It has no options, so you only log your positions and anyone can go in and check it out. Of course, this is not a recommendation or anything like that to do what I'm doing there, but I thought it would be nice to share it. And as I mentioned last time, if you know of a better way or a better website to do this, please let me know. And well, just to conclude this video, I will say that it's been a challenge. Well, it keeps to be a challenging environment. And many will say, well, given the market circumstances, it's good to be flat or barely down. But the idea is to be more tactical, to take advantage of the opportunities. And I hope I can improve during the following weeks. I think at least I have reduced my exposure, which is really good. And if the market gives me a chance, I'll try to increase it and hopefully get some better returns in the following weeks. And well, as for this video, I hope the keyword that I mentioned like 1,000 times, patience, 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 sticks with you. It's important to, well, I don't know how else to put it. Sometimes you just have to be patient. Don't rush into anything. If you are not doing good, like I'm doing right now, scale back, do not scale up, and please do not go into leverage. Take things, calmly, take your time, make adjustments, and once things start to move in your favor again, then you can start to scale up, back up, and hopefully I can do that in the next following weeks. Okay, enough rambling. I don't know if you found this interesting. Please remember to like, subscribe, turn on notifications, so all that good stuff. And well, as always, thanks for your time. Have a good one.